Good day, guys. On today's tutorial, we're going to be talking about something that's very important in forex trading. As a forex trader, you cannot go into the forex market and start trading without a trading plan. So I'll be teaching you more about a trading plan and how to actually plot a trading plan. If you are still a beginner in forex and you've never had an experience trading the market, what I would advise you to do is to actually go to your demo account, actually practice everything that you've been learning here, and basically once you find a strategy out of all these strategies that is suitable for you, that you can see that is very profitable for you, you can then think about starting and creating a trading plan before you actually encounter real account trading. Because what's going to happen is you're going to start to blow accounts and you'll never understand what's happening, and you will think that the strategies are not actually working when it's only you do not have a plan. The only plan you have is the plan of getting rich over one setup, which is highly unlikely in forex trading. So you need a trading plan to gradually grow your trading account. So let's discuss together the basic elements of a trading plan. You can basically take this and screenshot it and put it as your wallpaper. It all depends on you. Put it in a place where it's actually going to remind you of the things that you'll need in your trading plan. So the basic elements are goal setting, risk management, strategy, and commitment. Basically, we'll be talking about that after we finish here. So let's start with goal setting. So, in terms of goal settings, what is it that you need to be putting in your goal plan, or what is it that you need to focus on when setting your goals? Like, just like any other thing in life, ne? If you want to be successful in anything, you need to have goals. You need to write down your goals, your visions. But most importantly, you must not set ridiculous goals for yourselves, like things of buying a yacht and whatnot, making 10,000 while you've only withdrawn $10. Those are unrealistic goals. You need to set goals that are realistic and goals that are achievable. Things that the type of goals that you are capable of reaching. Because the more realistic your goal and the more achievable your goal is, the more likely you are to actually achieve that goal and set higher standard for yourselves. You understand? So you need to cut them down into small and manageable sections. So let's say you want to make $50. So you sit down and think to yourself, how can I make this $50? Is there a possibility that I can make this $50 trading? Yes, you can. All you have to do is to say, okay, I need to make $50 a week. So in order for me to make $50 a week, I need to make $10 each day. So you know that on Monday when you're trading, you need to come out of the markets, or you need to close the day with a $10 profit. So if you're consistent in that, you'll end up actually getting closer to the goal that you're trying to achieve. And the next thing is you must be specific with your goals. By specific, like, you need to know exactly what you need to achieve it, and you need to know when you need to achieve it. You understand? Because as soon as you point as soon as you point them out exactly as you want them to achieve, the more they get instilled into your head, and you actually get a clear vision of what you want to accomplish, instead of just saying, maybe I want this, maybe I want that, and what you see, you are a bit foggy with your with identifying exactly what it is that you are trying to achieve. If you're a bit foggy, chances are that you might not. So you're not even sure if you're going to reach that goal or something like that. So you need to be specific on what you need to achieve, and you need to identify your weaknesses and capitalize on your strengths. What do I mean by this? When we're talking about weaknesses and strengths in forex trading, you are most probably confused. Most people think that forex trading is just something that you put in money and you just get out a return and stuff like that. People, they don't actually understand that if you actually have a list of things or document that you have in place that actually is able to help you identify your winning trades and your losing trades, or the type of mood you are in when you're winning and the type of mood that you are in when you are losing, and all of those stuff that you would normally brush off sometimes. If you actually are able to identify those particular stuff, you can be able to identify your weaknesses, and you can be able to identify your strengths, and then you'll be able to capitalize on all of those strengths that you've actually picked up in your analysis. So yeah, that's basically what goal setting is all about. It's nothing much. It's basically something that you need to sit down on your own and basically think about and come up with a plan on how to actually achieve that. Now we move on to risk management. Now, every trading plan needs risk management. Risk management is a strategy on its own, but you can't actually achieve much on risk management alone. You need to combine it with a trading plan. So number one is you need to have a specific amount you're willing to risk on the Forex market each day, or should I say on your overall account. Let's say you're a beginner and you most likely want to start with $100. You need to make sure, first of all, that this $100 is not the last $100 that I have. I do not depend on this $100 to actually be consistent or actually make profits on the Forex market. The $100 that you need to be trading with is $100 that you're like, this is just extra money that will not affect me if I lose it. You understand? Because there's always a possibility that you might actually lose that amount in the Forex market. It's not a guaranteed thing, but we actually increase our odds by putting such elements in place so that we prevent anything bad from happening to us. You understand? So if you want to get into the Forex market, make sure that you are risking money that you can afford to lose. So you need to have a specific amount that, okay, now I'm willing to risk this amount. I'll deposit this amount in my Forex trading account, and I'll start trading this amount. Now you also need to risk no more than 5%. I mean, for me, 5% of your account balance is actually too much for me, because I only risk 2%. The maximum I go to is 3%. That actually goes in accordance with the amount of capital you have in your account. If you have anything less than $100 in your account, it's going to be very difficult for you to actually calculate the amount of risk that you're going to lose. That you're willing to lose in a trade. You understand? So that's why I recommend that new people that are still trying to test out the platform, they not. If you're new, first of all, you shouldn't come into the Forex market with the expectation of getting rich. You should be coming into the Forex market and exploring the market and gaining experience. Trade with minimum amounts of money so that you can be able to get used to trading Forex. Then you can start to think about all those big dreams that people promise. Because most of you here, you're most likely heard about rich Forex traders and how you can become rich. That's just a marketing strategy to attract people to actually buy these types of courses, take part in these types of trainings. You understand? But in reality, Forex is not really like that. Yes, you can make profits. Yes, you can be rich consistently. But if you come in with that mindset, thinking that you take one trade and basically be financially free, you have another thing coming. You need to understand and learn the whole procedure of the Forex market, just like I've been teaching you throughout here. So if you understand everything that you've learned here, now you can actually go and practice. Start gradually until you grasp everything, gain enough experience, and then you can start having those big dreams about Mercedes and all of that. So you need to risk a specific amount of capital in a single trade. You understand? So that would be 5%. I would say 5% is way too much. I recommend 3% for myself, but it all depends on your risk appetite. So yeah. The last point in risk management is to make sure that you are trading with a risk reward ratio of above 1 to 1. If you're paying attention on the previous lesson about risk management, you would understand what I'm talking about when I'm talking about risk ratio reward. My risk ratio reward is in accordance with the type of strategy that I use. Most of the time I like to trail my stop, but in some trades I basically place a risk to reward ratio of 1 to 3. You understand? So most of the time as a professional trader, I trade with 1 to 3. I cut on break evens. I sometimes lose trades. I sometimes take profit on 1 to 3, but most of the time I'm actually trailing because I'm taking breakout setups that have a higher likeliness of producing more profit. So I like to trail my stop in that way, but I always manage my risk 1 to 1. Anything below 1 to 1 means that you are not making enough money. You are not profiting on the Forex market, and that's actually a recipe for disaster. Understand? Even 1 to 1 is very small to actually be trading with. You understand? Because you'll be going nowhere slowly. The next point is your strategy. When it comes to strategy, you need to be using a strategy that has been back tested. You understand? So out of all the strategies that I've taught you, you need to have back tested all of them and found the one that's actually working for you. And that's the strategy you need to be using. And that's the strategy you need to be sticking on. And you need to be consistent with your time frames. You understand? So you can't just have, if you're a person that likes to trade using 3 time frames, let's say you want to analyze the direction of the whole entire structure on a higher time frame, then maybe you want to use that higher time frame, let's say 4 hour, and then drop down to 1 hour just to see the structure of the market. And if you want to take entries, you basically take your entries on your 1 hour, or you basically want to look for more confirmation and basically take your trades on the 15-minute time frame. So you need to be consistent with those time frames. You need to know which time frame is your anchor time frame, which time frame is your entry, which time frame is your structure time frame, and so on. So yeah, and you need to actually be consistent in confirmation. You don't just enter trades at random. You need to have confirmation. You understand? So you can't just see a setup. Maybe you don't know if, let's say for instance, you're a person that's trading structure and you are seeing a retest and you feel like, okay, this retest is going to go up, and you just enter blindly. No, you need to find confirmation. You need to find confluence, like those candlestick formations and all of that. You need to make sure that before you enter any trade, it has been confirmed that it's a valid trade. You understand? And you need to place a specific number of trades each day. Now, this is most important, guys, because this is actually going to determine if you are winning or you are losing in the Forex market. So if you are actually trading like randomly, you don't know how many trades you are trading at a time, you are basically, that's basically a recipe for disaster. You understand? So you need to identify the number of trades that you are actually implementing each day. This is actually going to help you with quite a lot of things. It's going to help you in terms of over trading. It's actually going to help you regulate the amount of trades you're placing. It will basically prevent those kinds of things from happening. You understand? So placing a specific number of trades a day is actually going to help you. Let's move on. Risk management, we've already spoken about that. Your strategy needs to have a consistent risk management on it. You need to make sure that you are trading with a proper risk management. And the second last one is specify your daily loss limit. This goes hand in hand with the amount of trades that you want to be placing each day. Let's say, for instance, you are trading, let's say 10 trades. You're placing 10 trades a day, and you have an amount that you've actually placed as your daily stop loss. Like, if I lose this amount of money this day, I'm stopping with my trades. So even if you're not finished with placing those trades, but if you reach that amount, that loss limit that you've placed for yourself, you are actually now able to actually exit without suffering more losses than you should have suffered. You understand? So let's say now, let's talk about this last point, which is your daily profit target. Let's say now you are placing these 10 trades a day, and your profit target is maybe let's say $10. You understand? So you know that placing 10 trades means that in each and every trade I need to be closing with $1 profit. So that's what you're going to stick to. Each and every trade you place, every time it reaches that $1, you close the trade out of all those 10 trades. You understand? But sometimes you do find those trades that actually move in a rapid way and whatnot. You understand? But if you have reached your daily target, you must always stop at your daily target profits. I'm not saying don't overtrade, but sometimes you can actually feel confident in winning, especially when you're winning all the time. You get too confident that you actually end up blowing your account. So I'm not saying if you're not able to take those extra trades, don't take them, but you must be committed to your own strategy. Understand? So yeah, those are the basic elements. And the final element is, in fact, it's the most important one. It's commitment. You understand? You need to stick to your trading plan regardless of any temptations. Guys, like I just said, you get overconfident when you're trading. Sometimes you feel like you are invincible. Now you start increasing your lot sizes. You start doing all those funny things because you feel like you are on the roll now. And suddenly things will just go in a completely different direction and you will never understand. Then you'll start blaming people, you start blaming the broker, you start blaming the market, you start blaming the mentor. But you need to take accountability of that, because you are the one who's implementing those strategies. You are the one who's actually cultivating your own greed. You are the one who's not protecting yourself in terms of trading, and you are the one who's not being committed in your own trading plan. So I believe that commitment is the most important factor of all of these factors that I've mentioned. And you must never allow psychological influence to derail you from your trading plan. You understand? Trading plan and psychology. There's a reason why we actually make a trading plan, is to actually isolate you from any psychological influences. Yep, you heard me. It's to isolate you from any psychological influences. It actually makes you trade like a robot. So if you stick to your trading plan and ignore all those psychological factors, it will be funny how you'll be winning, because you find that there are robots, there are systems in the forex market. People are selling robots, and people think that these robots have some magical powers. But if these robots actually had some magical powers, there would be a lot of rich people in the forex market. The only difference between a robot and a human is the ability to stick to a plan that has actually been programmed into that robot, and it does not have emotions. That's why robots are actually consistent at times. Robots trade just like us. They use the same strategies. They are programmed by people that actually learned what you have been learning today. But the only difference is that emotion and plan, they stick to those two. They isolate the emotion and they stick to the plan. You understand? So if you're also able to do that, isolate your emotion and stick to the plan, I call it place and forget. If you are able to place and forget, then you'll be trading like a robot, and you will not need to pay all these huge amounts, because people, they charge huge amounts for robots as if they are selling them wealth itself. But in actual fact, if people were actually creating robots that were profitable, they wouldn't have. I'm not saying they are not profitable robots. Some robots are profitable, but if robots were the holy grail, they wouldn't really be selling them. Some will, but I don't think I would need to sell a robot if I have something that's actually if I had a goose that's laying golden eggs. Why would I want to sell that? You understand? I'm taking away food from my mouth. So that's basically it. I would say that a holy grail in forex trading is having a good what's this a good trading plan and actually sticking to it. Yeah, guys, that's it for the day. I hope you enjoyed this lesson, and I hope it made a lot of sense. Yeah, that's it. Have a great day. Goodbye.